So with that brief outline of the proposals, what's the general view on all of this? First question we might ask is, will this even happen? It looks somewhat theoretical, somewhat complex at the moment, so you might say this will never fly. However, we should remember that BEPS a few years back looked like a very complex proposal and unlikely to succeed. But look where we are today. Many BEPS proposals implemented across the world have become reality. So this OECD programme of work on the digital economy may well happen too, and clearly there is significant political support behind it. So if Pillar 1 becomes reality, how much profits would be allocated to the market jurisdictions? The idea is to reallocate a proportion of what's called the residual profit of a company to market jurisdictions. And the idea is this will be done in accordance with, first of all, a new nexus, so no need for a physical presence. And then the idea is that there would be a 3-tier mechanism that would allocate profit beyond the current arm's length principle. There'd be 3 different amounts that could be allocated, and they're called A, B, and C quite simply. And here we're going to focus on amount A because it's the biggest change probably. Amount A represents a share of deemed residual profit using a formula approach. To determine amount A, the following steps would be followed. Step 1, determination of the total profit based on the multinational enterprises group or business calculations. Step 2, split the total profit into the deemed routine profit to be allocated to the countries where the activities are performed based on an agreed level of profitability, for example, fixed percentages, return on assets, etc. Then the deemed residual profit, which is the amount left after calculating the routine profit, can be allocated. Step 3, based on calculations yet to be determined, some kind of fixed percentage or formulary apportionment, you split the deemed residual profit between those profits which are attributable to markets and those which are attributable to factors other than the markets. For example, it could be trade intangibles, it could be fixed assets. Then step 4, allocate the relevant portion of the deemed residual profit among market jurisdictions based on agreed allocation keys, for example, sales. In addition to amount A, there's an amount B and C that could potentially be allocated, but they look more closely to what we have at the moment. So, how will Pillar 2 actually come about? So again, we're talking about minimum tax here. First big question, what's the minimum rate? And here we get into some touchy political issues because we may be coming up with a definition of a new tax haven. Should we be at 10, 15, 5? At what point is a minimum tax rate unacceptable? The next question is, how do you calculate the effective tax rate? And the proposal under Pillar 2 sets out some proposals around looking at financial accounts, taking into account differences calculated according to different accounting standards and across different jurisdictions. The GLOBE proposal also includes rules that explain how a taxpayer might mix high tax and low tax income within the same entity or across different entities to come up to this minimum tax rate. So what happens if you don't hit the minimum tax rate? The proposals under GLOBE are, first of all, that there would be an income inclusion rule. And this is a bit like a CFC rule. So if income is not subject to an effective minimum tax rate in subsidiaries or in other countries, then there's a top-up. Secondly, there's an undertaxed payment rule. So if a company in a jurisdiction is making a payment out of the jurisdiction and that payment is going to be lowly taxed, then there is a way to either disallow the deduction or even apply a withholding tax. And then finally, there's a proposal to introduce a subject to tax rule, which would really involve changing the double tax treaties to allow withholding taxes, for example, if payments are taking place to a low tax environment. Now, this is all very interesting and, quite radical in terms of the changes suggested. But should it happen? Will it happen? Pillar 1 shifts profits from producer states to consumer states. This will have consequences for the relations between states with economies that produce high-value goods and services and the states or regions with a large consumer population. The irony is perhaps that some of the countries pushing for the adoption of a digital tax, when you look at them, the construction of their economy is large, high value added economies with relatively small populations at a global level. From a business's point of view, should this happen, Pillar 1 and Pillar 2 at the moment look as if they create fairly significant cost and complexity in an environment where most businesses are saying, we're happy to pay tax, but pay it once and tell us in a relatively straightforward manner how we should pay it. This proposal, with its complexity, may actually slow down cross-border trade, we believe, and indeed emphasise the concentration of economic power in larger companies, as only larger companies will be able to cope with this. Other question you might ask is, if we look at the tech companies that sparked these proposals in the first place, their effective tax rates are lower, but are they so significantly lower that it's worth reworking the global tax system and creating this complexity? Another question that we might ask is, in doing this, will we make a significant difference? BEPS has made fundamental changes already to the tax system, and we're concerned we may be hitting a point of diminishing returns. Pillar 1 and Pillar 2 will demand a lot of effort and investment, but we'll still be talking about reallocating what represents a relatively small part of the overall tax base, which is corporate income tax. This is about 8% of total tax in the OECD countries. And ultimately, are we putting the energy where we should be putting in global tax policy? Because ultimately, we may move the needle slightly, but we won't, for example, be hitting some of the bigger problems that taxation policy could be dealing with, such as inequality, such as the environmental crisis. What we're doing here is just a slight reallocation, arguably moving the deck chairs around on the Titanic. So with that passing thought, I'll thank you for your attention, and we'll look forward to seeing you on one of our future blogs.